Hey everyone, this is June from Turning Point Life Investment, and this video is for the week ending in October 4th, 2008. So once again, it's the end of a calendar month for September, so we're going to start with a longer term monthly view, 10-year monthly, and that's what's in front of you right now. As you can see, we really have a strong downward momentum. We had a break of the 50-month moving average, and it basically came back, retested it, held as resistance, and prices basically fell right afterwards. We found a little bit of support right around the 110 area. The next level of support that I see on the long-term chart is probably right around the 105 area. Now, not to mention, if I pull up the Fibonacci retracement, if we start from all the way back here, we can see that the 62% is roughly where this 105 area is as well. So 105 is looking to be a pretty good next support level. Stochastic and MACD are all pointing downwards. We're not exactly oversold yet, so there's still plenty of downside momentum and room for the market to go. Overall, from a longer term view, there's really no sign of a reversal anytime soon. Volume is definitely picking up toward the downside, so we can expect the market to drop even more, maybe even finding support at around 105 in a grand scheme of things. Let's zoom in on a weekly view and see. Okay, this is a 3-year weekly view. I did mention last week how we are starting to see separation between the 20 and the 50 and the prices. Notice how everything's starting to fan out, and that indicates strong momentum. And that's really what we got here. And notice how far we are now from the moving averages. We're right about 110, and the moving average is right above 125. So it's creating a very stretched out situation right now. Can it get stretched out even more? Absolutely. But it's setting up a possible reversal. So the further stretched out we get, the higher or the likelihood of a possible limit we're going to reach with stretching of the moving average, and the higher the chance that we will get a possible nice relief rally towards the upside. This large dark candlestick indicates bearish momentum, which is what we had this entire week. Volume is up. Stochastic MACD not really telling us a whole lot. So there's still, basically it's pointing towards a lot of potential downward momentum that we can still accomplish for next week as well. But you do want to be mindful of this right here. Notice how we never really have the moving averages stretched out that far from the prices. So this is definitely something that you want to be mindful of whenever you're entering bearish positions onto SPY. Moving along into a 6-month daily view, we notice we had that historic large down day we had on Monday. We had a nice little relief rally Monday and Tuesday and Wednesday, and then basically Thursday and Friday continue with the sell-off. So once again, there's really no sign of a bottom on Friday. It seems like there's Monday and Tuesday will probably follow up with more down bearish momentum. We said from a longer chart, 105, I would say probably 105, 106 is probably the next support level. Once again, stochastic and MACD are all pointing down, so there's plenty of downward momentum that we have. You can also see how even on a daily view we are getting a little bit stretched out from the 20-day moving average. So once again, from a daily and a weekly view, it's showing that we are reaching somewhat of an extreme situation right there. And lastly, we're going to an hourly view. Last week I mentioned 118 was very good support. We broke through that. Right, any break of 118 would have been great for bearish positions such as puts or bear call spreads. So hopefully you guys got entered there to make some money this week. We found support right now around the 110 level. So any break at 110 we can probably see on 105, and if the market does rally, expect to see some kind of resistance back here around 118. And notice how, let me take away the lines here. Notice how now that we're trending on a short-term level, every time we get a pull back towards the 20, that would have been great entries into SPY as well. So moving averages are great for to use as entries. Okay, turning our attention to the VIX. I mentioned last week how this is actually a very bullish pattern. We had a breakout above 30, and it looks like a bullish flag consolidation pattern, and a pop above 36 would be actually very bearish for the market, and that's exactly what happened. We had a very large pop to another new high of 48, and right now the market within the last 4 days as far as the VIX is basically consolidating. And once again, it does look like another um, bullish flag kind of consolidation pattern. So if we get another pop above 48, once the market is going to be in some major downturn. If we do get some kind of rally, expect to find some kind of support right around 36, right around here. I don't think we'll ever drop back to 30 anytime soon, at least not the way how the market's going right now. And as far as option premiums, that remains high only because of this high VIX, and people are basically running in fear buying their puts right now. Okay, lastly, turning our attention to the open interest for this month of October. As far as resistance from the strike levels, the only one that really sticks out is 120 right here. But 120 is rather far away. But then again, with these kind of movements, we can easily see 120 in just a couple of days. So 120 is something to look forward to as far as resistance. As far as support, 110, basically that's more or less where the market closed. We have a very high level of open interest right there. So 110 should more or less clue you into a possible support level right there. Going back to SPY, just to recap, we do have support right around the 110, 111 level. So any drop lower, we said expect to find some kind of support around 105, 106 level, and immediate resistance is right around the 118 or wherever it tags the 20-day moving average. So the market is starting to get a little stretched out, just a little bit. So I will be a little more cautious as far as how many bearish positions you would place into the market. So if you have profits, I suggest maybe slowly taking some profits off the table already.